So welcome, guys. Let's start with you telling about yourself, your journeys as to how you got into trading. Should we start? We'll start with you, Dan.
Yeah.
Where it all started, and also a little bit about how you define your strategy.
Yeah, sure. So I graduated from university when I was about 20 years old. Did an accounting and finance degree, so I kind of always been quite comfortable with numbers and focused in that area educationally. And in my last sort of year and a half of university, I managed to be lucky enough to bump into someone who could advantage play fruit machines in pubs. And managed to graduate with savings, which is not many people can say, and tried to get some accounting graduate jobs, and the competition's really quite tough in that industry. You could still make money playing slots on the side. Gave myself 6 months and thought, right, okay, see how it goes. Did it for about 10 years. Primarily, it's just in the pubs, it was sort of short-term advantage playing. So identifying when the machine was above and below percentage targets. And latterly, I can still stay in touch with some people and manage to get some quite good information from time to time, which tends to focus now around expected value calculations. And I would say honestly now, if machines were still good, I'd still do it because it was like the lowest variance possible that you could ever wish for. And the money was mega consistent and good money. Dried up a bit and I moved into online poker. Did a few years playing online poker, which I enjoyed. But then, as you're probably aware with your background as well, we had Black Friday. And all the Americans kind of pretty much disappeared overnight. And primarily when you're playing online poker, you're looking to identify who the bad players are to take the money off. And a lot of those players disappeared quite quickly, and it was like a bit of what we call a shark fest. And everyone's the money's circulating around the table, and everyone's sort of taking it off each other, and there wasn't so much of an edge. And then moved into sports really because I was looking for something else to do. I've always been good with numbers, and looked towards football initially, didn't work out great, and then found tennis. And tennis really isn't, I'll say, my number one sport in terms of a fan, but maybe that provides me with a bit of an advantage over someone who is a fan because I can look at things more objectively. You know, people, sometimes I get emailed and say, how can you bet against Roger Federer because he's a legend? And I'm like, well, he's not a legend. He's a legend for what he's achieved, but he's not a legend personally in my eyes because I'm not really a fan, if that makes sense.
So you're principally an in-play tennis trader then?
Yeah, so basically, kind of momentum is, I think 2 years ago when I did a presentation here, I gave momentum a bit of a kicking. And going against momentum is quite a big thing for me. So I developed quite a lot of stats, in-play stats, which you can't really get commercially because I wanted them for my own purposes, to look at opposing players with momentum. So players may be leading by like a set and break, for example, they're trading really low in price, and then you can try and, looking at opposing those players when they're leading and in a dominant position kind of thing. There's a few other spots as well, but primarily it's like kind of like low risk, high reward type stuff.
All right, let's go to Caan. Now, Caan, you and Peter are probably leaders in also the education of traders. Your blog, From Oh Shit to Aha. So tell us, you started at Oh Shit and now you're at Aha.
Quite literally.
I love that
Oh
title
shit,
of a blog. Yeah.
Okay, so my journey into sports trading started purely by accident. I come from the recreational punting side of things. Beforehand, I was just betting purely on horse racing. Quite frankly, I didn't know what I was doing, as many do. At the time, I was in the military, so I was in the army, and I served overseas in Afghanistan. And it sort of come to one of those transitional points within my life where it was like, what's going on here? I want to live a little bit longer, for a start. And secondly, at the same time, I found out I was going to be a father, so I needed to sort of address the financial situation in my life. I didn't have any grades or qualifications or, advanced stuff like that. So,
I mean, we've all been in that spot, but in your case, you
sure.
actually, it worked.
So I thought, hey, I know how to deal with this. Let's start betting more. Made perfect sense. But fortunately, that turned out quite well for me, yeah. So it didn't go down well with those around me for quite a long period, but come out on the other side and sports trading and horse racing markets is what I do.
And it's been about 6-7 years.
Sure.
Although, and Peter, you are probably one of the pioneers. I think I read that you joined Betfair, was it 7 days after it opened? So this is like 99 or something?
Yeah, it was in June 2000.
Yeah.
I think it was the 18th of June 2000 was the exact date. Not that I've edged it on my brain or anything. But
I was a little late to the party. I don't think I joined Betfair till like 9 or 10 days after they opened.
yeah, I was in consumer technology, bizarrely, and I'd always had an interest in financial markets. And that was going to be my escape from the corporate life. So I'd gradually worked my way in a long and winding road up the corporate ladder. And I'd sort of reached the point that a lot of people reach, which is that you sort of think, I can't do this any longer. The business plans were the same every year, which was basically the same as last year, plus 20%, but you're not getting anybody else to help you do it. And I sort of realized after a long period of time that I was going to have to make a break at some point. So the break for me was going to be financial markets. That's where I was going to go. I'd messed around on them for years, and I thought I'm just going to give this a proper go. And it was at that point that betting exchanges came to the fore. And I had gambled in the past, but bookmakers had banned me, and I realized it was just a dead end. The overrounds are massive, and there was just no advantage, and there was no way that I was going to do it for a living. It just wasn't going to work. So financial markets were going to be where it was going to go for me. But then exchanges came along. And I remember sitting in a board meeting with my laptop open. And everybody thought I was making notes. But in fact, I was closing a FTSE up-down position, which was heavily in the money at that point, which I feared by the end of the meeting would have lapsed for zero. And I got called over afterwards, and one of the guys saw what I was doing. And it was at that point that I thought, well, I've really got to make a go of it. If I'm going to do it seriously, and I like the concept, and I think that there's an opportunity here, then I've got to make the break. So turned up to do the annual business review, and just put up one slide, which was find a replacement for Peter. And that's how my journey started. And it's been a great journey, and I'm here now 17 and a half years later.
And of course, in addition to being a successful trader, you built really one of the anchors of trading, sports trading, which is BetAngel and stuff like that. So you're very involved in the software behind it. Now, your tennis, Dan, you're mostly in horse racing, Caan, and Peter, you're involved in soccer and pretty much everything.
Yeah, I do. If there's enough liquidity, I'll trade it.
Before we open up to the general questions, I mean, is there something about your guys' strategies that is tailored to those sports? When you get together, is there stuff you guys take from each other, or are you kind of like, well, I know he's successful, but I couldn't do that? I mean, could you be in racing? Could you be in tennis and vice versa?
It's funny enough because we kind of spoke about that sort of thing earlier, and I said if I was doing what you do, maybe I'd think about looking at it at this angle and stuff like that. So yeah, we did kind of talk about that.
Yeah, I think
earlier.
we approach things in very different ways, but kind of come around to a similar result.
Yeah, exactly that.
Yeah, I think at the core of trading, I think there are many ways of trading. So if you're a value guy, necessarily you're looking to spot value, or as Dan said a second ago, momentum in tennis is, you can see it in the markets. A set and a breakdown, you realize the price is very different from perhaps where it should be. But I think there are so many different ways of trading and so many different ways of participating in the market that there's room for many different types of strategies. But typically, my way of trading comes from financial markets. So I look at value and I look at opportunity, but I consider myself to be selling volatility. That's what I consider my role is within the market. If people panic, the price moves too far away from what I consider to be a decent price, then I'll correct it. I am part of that mechanism that makes the market efficient.
Should we, any questions yet? I don't want to...
Question for Dan.
Yeah, sure.
I spoke earlier about poker. I speak to a lot of traders, a lot from poker background. They also talk about very similar thing to you about the Americans sort of leaving the games. If we ever did see an influx of Americans onto the exchange, would you see that as a bad thing or a good thing in the long run?
My initial point of view there would be that it would be a really good thing.
Yeah.
And no offense to Jesse, but
without
I found that Americans
towards any Americans.
No offense to Jesse, I'll say, but I found American gamblers are generally quite bad with their money. Yeah. And the American people that I know kind of as friends also, they seem to have quite a disposable income that they're quite keen to be apart from, if that makes sense. So yeah, I would think it is a massively good thing, and for me, the biggest positive, one of the biggest positives, future developments that could actually happen.
Here's hoping.
Yeah, very much so.
I mean, I read a quote from you, Peter, and it may be an old one. You said, if you gave me £1,000 now, I could give you £2,000 next week. But if you gave me 100,000, I can only give you 102. Sort of, is that still true, intimating that actually all the opportunity for traders right now is still really limited by market size?
I think that the market could cope with a lot more liquidity. And that's yeah, I've been to the US frequently over the last 10 years or so with the goal of trying to gain some traction, mainly through talking to people and, trying to, but of course, you have a lot of things to go through there, mainly legislation. But depending upon how you decide to trade as well, you'll get a slightly different answer. So certainly for the way that I trade, if you gave me 1,000, I could still give you 2,000 back. But if you gave me 1 million, then you're severely restricted. So if you look at the average UK race, it does about £500,000. And so the more liquidity that we get, the better. And to be honest, I really thought that after all of this time, we would be at the stage where an individual racing market would be doing millions. And that's sort of where I want to see the whole exchange concept go. I'm not talking about specifically, one exchange partner or another. I want to see it absolutely massive. And if the US came on board, then that would be absolutely massive. And I'm hoping that all of the US citizens live up to Dan's expectations, because that would be massive for us as well.
I resemble, as I said, I joined Betfair 9 days after it opened, still yet to have a winning year there. So, I mean, you definitely want the Americans on. And anybody else, just shoot your hand up and we'll bring a mic around.
This is to Caan mainly. Betfair premium charge. I assume you're paying it. I guess you are. How much does that actually affect you?
Straight to the throat.
Ask the other gentlemen as well if they're paying Betfair premium charge as well, so they can answer as well.
Of course, it's a tricky topic, I think, for a lot of people to discuss in public properly, because
There's a huge
then
incentive,
there's a huge incentive to avoid it, basically.
Yeah.
Quite openly, everybody wants to avoid it.
I think all three of us either do or have written for Betfair in recent times as well. It's quite difficult for us to answer questions like that, really.
But I think, in all honesty, it's a good question, because it is an issue within the industry, and that is why your matchbooks exist, because there's a positive outlet there for that sort of money. So the bizarre thing, and one of the issues that I have with the premium charge, is as the markets have become more efficient over time, the great thing about exchanges is the overround now is absolutely minimal. It's absolutely tiny. So the edge that you're having to overcome to be able to make money is the smallest that it's ever been in the history of this type of market, in betting in general. So the bizarre thing about the premium charge is that it makes no sense for me to bet on Betfair. So all of that activity and all of that business goes elsewhere, which doesn't seem to make any sense to me. But obviously, for our sponsors today, that makes fantastic news. It does seem a bit contradictory. There must be a better dividing line.
Well, you could say that the premium charge, it goes hand in hand with the commission structure. I mean, Ronan Ryan, if you're before lunch, he said he's counted, is it 864, I think he said, different commission structures for financial exchanges. We certainly have a lot of different ones in the sports exchange as well. Are we clear right now? Is it clear what's best for the different groups?
I think the main problem with premium charge is the way it's calculated, because it's very flat across the board.
Yeah.
There's not like an annual allowance or something like that. That would be far better, in my opinion. But obviously they've got to factor in people doing different things, different edges, quarter-siders, people taking a lot of money out of the market via other means.
Yeah, and I think the problem for me is I was miles over the limit when it was first introduced and when it was revised. I had no chance to mitigate it, absolutely no chance. But people who are below it now do get the opportunity to mitigate it before they breach that level. So it's totally unfair on people like me, although you could argue that I was one of the people that actually helped create it in the first place by doing too well. But I think there is a better model. Having come and spent a lot of time in financial markets, I'm used to an ECN, a pure exchange, where you pay a transaction charge. Now, I don't want to pay transaction charges. But by the same measure, I don't want my profits to vanish because I'm risking my own money on my own terms to put that through the market, and I should be rewarded for that, not punished. That's how I feel.
Brad here.
I'd be interested if you could give a couple of examples when things that might make you make a trade. So selling volatility, a couple of examples of when you would do that, and for all three of you, really.
Okay, do you want to start, Dan?
Yeah, okay, so for example, I'll give the example.
Maybe like, what's your dream scenario?
Yeah,
you know,
well,
what wakes you up in the middle of the night if it happens, right?
Well,
It's a nightmare, isn't it?
yeah, well, the thing for me would be like the perfect storm, pretty much. So you're looking at opposing player. Let's give the example of opposing a player with momentum, like we were talking about earlier. So you'd have the stats that you generate before the match, so you would know whether a player had poor recovery or good recovery or poor deficit, they're bad at leading or whatever, bad at front running, and perhaps more vulnerable on serve than average, stuff like that. But then you could also put that in conjunction with like the in-play statistics as well. So for example, give a real broad example, the guy who's a set and break up might have literally just taken his chances, converted the 2 break points that he's received in that game, and then the guy who's losing has like wasted an abundance of chances and could easily, he's arguably been the better player, but not taking his chances. And then you can kind of marry the two things up, the stuff you've identified before the match and then stuff in play as well, kind of in conjunction with each other, can work quite well.
What about you, Ken? I mean, it sounds like Dan
That's
is...
very tennis related, yeah. If we move over towards the horse racing markets, I'd say situations where there's not a lot of information on offer, a lot of uncertainty and fear within the market. So sort of the first thing that springs to mind is like Barney Curly runners within the market. If you've ever watched one of them
It
on
is
the
such
ladders,
a shame he's retired, isn't it?
yeah, sure. If you've ever seen one of them in the past on the ladders, it's crazy.
Yeah.
And them sort of situations, the market talks to you more. So from my point of view, I prefer that.
Yeah, I think you could give several. I know what the perfect trade is. I've scored it in my head 10 out of 10. And it happens, just not very often. So you're generally dealing with a graduation of opportunities. Some are awful that you definitely shouldn't take advantage of, and some are slam dunkers. And you need to do everything you can. But I think there are two key things that I see in the market that repeat on a regular basis. The first one is overreaction. So I sat down with a hardcore racing gambler who knew so much information about this horse. And you could see the price was coming in and coming in and coming in. He was going, well, it's gone up in trip. It ran well last time on this ground, et cetera, et cetera. And he wouldn't back it. He was, from a trading perspective, you want to back it and see the price come all the way in. But from a betting perspective, he was just sort of saying, well, there's no way that the price should be coming in, so I can't initiate this trade. And I said to him, but it's coming in. And he goes, yeah, but there's no reason why it should do. And I said, but it is. That's happening right now. But what you often tend to find is that when momentum builds for a big trade like that, it goes too far. And all of a sudden, it's way beyond what could be accepted as reasonable value. And it will correct before the start of the race. It's just a question of how long is that going to take and how much time do you have that trade to do. The other thing I'll add into the mix as well is you look at major meetings where you have a jockey that wins 2 or 3 races, and guess what happens? Everybody starts backing the jockey on the next horse in the next race, even if it's got absolutely no chance of winning. And that makes for a perfect trade, but it's a terrible bet. But you try and stop people from doing that.
It's a bit like what Dan said earlier about separating the fanaticism from trading what you see rather than what you want to see.
And I mean, it sounds like Dan actually forms opinions, does stats and analysis. Do you guys more lean towards, I don't want to know anything, I don't want to have an opinion, and is it more just about the market for you? I mean, is analysis overrated in your business?
The terms of analysis you're talking in there, I think like horse racing, the media type stuff you see from horse racing on TV, I completely ignore it.
Well, I definitely agree on that.
Pretty much.
Punditry on tennis, football, racing, cricket is generally not done from a value perspective, so it tends to be incredibly misleading.
Couldn't agree more.
Yeah.
And I'd recommend anyone who wants to trade tennis just put it on mute, because the commentators are horrific, and And the commentators, in my opinion, are driven to have this innate desire to always look like they're right.
Yeah.
And therefore they favour the front runner too much. And they try and look for things to back their arguments and points that they're trying to make. And to be avoided at all costs, pretty much.
I think one of the biggest things that you can gain from an edge in the market, I think it is important to an extent to know what value is or where the price roughly should be, whether you're looking at the specific pricing of somebody winning an event, a tournament, or some other aspect, or whether you're looking at where it trades within the market. Because if Manchester United are odds of 6 against a team bottom of the league, then that's obviously value, and there's probably something in there. But if they're at odds of 1.1 against a team 2 places below them, that's a very different thing. So you have to have some measurement or general perspective. But in terms of knowing the detail, I think certainly Caan and I are more interested in order flow. So you can do all the analysis you like. You can say which horse is going to be backed on the ground and whatever. But if it's not being backed and they're going for something else, it's right in front of you. All of that information in the market, all of the detail and knowledge that's within there, for some reason, is directing you straight into that particular runner. So you go with that. And, pure cold trading is how you would exploit that situation. So your ability to read the market outside of the form and other stuff is quite important within that. But you can use both. But typically, I'd say that both of our styles are typically trading order flow.
Right, you're not coming up with a tissue. I mean, an actual. Yeah.
No, I've done it, but it didn't help. It made no difference to me.
Hello. Yeah, talking about order flow there, we heard from the guy before about false orders being put in on the stock market and spoofing. Does that happen much on the exchanges?
Should we both take that one?
I'll let you take the lead on that one.
Yes, is a very short answer. There is this game of cat and mouse going on. So typically, at certain moments in the market, at certain price points, you do tend to see false orders within the market. My attitudes to that is that you expect it. So the ability to read through that and see what the general trend within the market is more important to me than realizing that there is false money there. But typically, if you see a large order, then if you know it's likely to be breached, then it may just give a little bit more momentum. But it happens all over the place in the sports markets. Do you want to add to that, Caan?
No, I think it's
Can you teach that skill? Or, I mean, honestly, do you think that is a learnable sort of?
It is.
Yeah.
It is. It's funny because when you watch markets, I've now traded nearly 200,000 horse races. And when you trade that number of races, you see the patterns repeating again and again and again and again. So after you sit there and watch it for that length of time, you begin to understand the dynamics of how that occurs and why it occurs in that particular manner. So you're sat there, all of a sudden an order appears and you think, I've seen this before and I know exactly what's going to happen next. So it is possible to do it, and you can explain it, but experience is...
You can get extra value from it as well.
Yeah, experience is an important part of doing that as well, because not only do you have to identify a situation, know what's likely to happen next, you have to have the balls to actually do something about it.
Because, I mean, you guys are all quite really open. I mean, you made videos, let people watch you trade it. It's quite open, and I think there is sort of like this question about, are you guys athletes who are above the rim, or is your method really transmutable? I mean, how do you guys feel about the people who have learned from you,
That's a good question. I mean, I get emails quite regularly from people sort of appreciating what stuff that they can learn and picked up through articles or videos and stuff like that. So it's definitely transferable from that context. But then you also probably get quite a few people that say, look, I'm struggling primarily because they've got bad bankroll management or discipline and things like that. So yeah, I think a lot of it's down to the individual person as well, who you're trying to translate that to.
Yeah, you do hear from them, but I think those people typically, they don't shout a lot. You might get one message and then never hear off of them ever again. So it's a little bit biased in the general public. You hear about people that are sort of unhappy, but the people that are kind of like, screwing it away and off they go. They don't.
Yeah, I think the difficulty with trading is that there's never a definite yes or no to anything. And you're always in a grey area. So you're sort of saying, well, this is likely to happen, but there's a chance that it may not. And so I think psychology comes into play a lot. And it's quite easy to identify when you see people who've got the right psychology or not. I've had a couple of great examples in the last couple of days. But one of the things that helped me evolve as a trader was understanding that decision-making process. So I got really deep into the psychology of trading and started looking at prospect theory, which if you've never read up on it or you don't know what it is, wiki it straight away and start reading up on it, because it describes how people treat profits very different from losses and how that influences the decisions that they're likely to make. So when I'd read up on this and understood the way that it influenced the market, then from my perspective, it allowed me to exploit it. But from the general market perspective, even if you give somebody a really, really good strategy that's absolutely perfect, that they cannot lose money on, they will lose money. So you have to combine those components together. I think there's a bit of analytical stuff that Dan's talked about. You need to be able to understand and trade the markets, but you also need to have your head in the right place to do it.
I think that, just to add to that, that applies a lot more, I think, to sort of pre-race horse trading, because the markets are more sentiment-driven. There is a lot more of that at play.
Yeah.
And it's the part that's easily forgotten and the part that's not very glitzy and everyone wants to talk about, but it's a huge contributing factor.
It is. I totally agree. And if I do a video on psychology, nobody watches it. But if I do a video on how to make 150 quid in 2 minutes, I'll get loads of likes on it.
Yeah, exactly, yeah.
And the fact is, it should be the other way around.
Yeah, I agree.
Here in front, John.
Hi, Peter. About 10 years ago, when you were kind enough to appear on Juice Storm Radio, I think your turnover was about, well in excess of a billion then. That was 10 years ago. What is it today?
Yeah, it depends how you, there are so many, the difference between 10 years ago and today, for example, is that I do more markets than I do now. So I'll cover, for example, I picked up and started doing greyhounds again this year, which seems total madness because nobody does it. It's very illiquid. But I just fancied the challenge of getting involved in that. So I must admit, I don't know how much I've done on greyhounds this year, but it would be pretty significant, I would think, because there are about 100 races a day that you can participate on. But for me, part of the equation was not understanding that you could do something. It was pushing the scale on which you could do it. So as people know and often take the mick out of me, it's a real rarity today for me not to have a laptop and to be trading right here, right now. Because it will always be something that takes priority. I've only had one Saturday off in 17 years. Simply because that's the biggest day of the week. So I can't give you a definitive answer on what it is, but I'm much more active than I was 10 years ago.
Got to be double then, hasn't it? Double?
I've no idea. For example, I'm sort of at the stage in my life where I'm changing priorities a bit.
Yeah.
So my children are old enough to gamble and trade themselves. So it's completely my intention to hand over responsibility to them. So a Wolverhampton race on a Tuesday evening or a Wednesday evening at 7:30 that's going to turn over 300,000, I'm not interested in. So liquidity drops there. But when we get a big Group 1 race on a Saturday, I'm going to be behind my desk, armed to the teeth, and the door's locked, and nobody disturbs me for the rest of the day. And I may not even go to the loo. So I think, I've declined in some areas and grown in others. But I'm a perpetual fiddler, so I'm sure there will be other markets. I really would love the liquidity to be so much higher than it is now, because I would certainly...
Is that affecting your ROI? Obviously, the bigger your bank gets, then your ROI has to go down a bit, I would think, no?
Yeah, any excess capital gets invested, basically, now. So I spend a bit more time investing now than I used to 10 years ago. So any excess capital that I can't use in the market goes and is invested, or I'll have a punt on VIX or something at some point in the futures.
And when I'm back in Malta, you'll come on Juice Storm Radio again, yeah?
Yeah, sure.
Thank you.
Can I ask about your guys' predictions for the future of exchange betting, either what you think's going to happen or what changes you'd most like to see?
I think, if the US came on board, then that would be fantastic. I know there's a lot of activity in Asia as well. It's just none of it is above the ground. So typically, the Asian market is huge, but we never really see it in the UK. And I think if the US market took off, that would be fantastic as well. And from my perspective, I'm going to keep on pushing from there, even though there's not necessarily a benefit to me creating that opportunity. I would still love to see it happen, if not for me, for the people that follow. So that would be the best thing. I think that Bitcoin exchanges are going to pop up inevitably. I think that will service markets that can't be serviced by traditional means, but that liquidity will probably not spill over into the traditional and regulated exchanges. But nonetheless, blockchain technology may end up creating an opportunity off the back end of that and changing the way that exchanges work.
But why not just trade blockchain? I mean, why not just, is it the same?
Yeah, I mean, it would. I think there will always be opportunities. The most important thing is, because the opportunity is there and it's been proven that it's there and loads of people have done it, I don't think that you can pigeonhole exchanges back into the box from whence they came. I think that will always be there. It's just a question of the scale and scope of it. So I really hope that it will continue to grow. And that's half the reason I'm here today as well, is that I think that whoever wants to support that will get my support as well.
It's something that I've thought quite a bit about, and similar to what we were talking about earlier with Tom, about America and also, like you say, Far East as well, China. But I mean, I'm not holding my breath on China. You can't even go on Facebook there. So I'm not sure Betfair's on the agenda for China. But for me, like, I grew up, as I said, I started my sort of gambling career playing fruit machines, and the regular question that I would receive from friends and family, and also other people that were in that industry, other pro gamblers, would be like, "What are you going to do when it finishes?" And I'm like, okay, well, maybe I need to have a backup plan. But I obviously had a degree, and I thought, well, okay, well, maybe let's worry about it a bit more when it actually happens. And so I've kind of rationalised myself to be quite calm about future situations, and as long as I've got some other things on the back burner that I can turn my hand to, then that's not a major issue for me, really.
I thought I had about 3 years in the market. I didn't realise that I was going to be here 17 years later. So I worked furiously hard for 3 years thinking that would be it. And the fact it's gone on this long makes me think that it will continue. In what form, I don't know. Or how it evolves, I don't know. But I get the feeling that that opportunity will continue. Did you want to add something, Caan?
No, I was just going to say, it'd be nice to see exchanges in the betting industry, especially like flourish more in the book way, rather than turning into bookmakers once they become more dominant. But whether that happens, I don't really know.
They should be, really, in all honesty, shouldn't they?
In truth, yeah.
Because it's a much better way to, if you're placing a bet on an exchange, then the overround is going to be so small. On the Cambridgeshire at Newmarket, I think it SP'd at 99.8%, which is just mental for a huge field of that size. And whichever way you look at it, that's got to be great value for money. So you really want exchanges to be the dominant leader within the market. And when you look at the regulatory issues and the sort of press that they've been getting, saying all these people have been losing so much money, well, on an exchange, even if you are a loser, it's going to be significantly less. So from an ethical viewpoint, it seems to make a lot more sense to promote an exchange over a bookmaker that's going to offer you 150, 160% on the Grand National.
I agree with that. Anyone? Yeah. Sorry, you haven't had a chance yet. Yeah, we'll come back.
Okay. Where do you see yourselves in 10 years?
On a beach somewhere, probably. The kids will be slogging away on the 7:30 at Wolverhampton, and I'll be phoning them up to ask them exactly how well they did.
I hope they don't on Saturdays.
They won't have a choice.
I honestly haven't got a clue to that one.
Sometimes that's the best way, isn't it?
Yeah, I mean, it's a really difficult question to answer. I mean, from a personal perspective, perhaps I see myself maybe eventually as I get older moving into like a more of an analytics kind of driven field, something that I'm trying to develop a little bit more as a side thing at the moment, and that's kind of maybe where I'm looking to head in the longer term, but yeah, I haven't really given it a great deal of thought.
I think it varies depending upon your life goal, because when I started, the kids were toddlers, and I was more concerned about making a bit of money, but as time wears on, I think your aims change a little bit.
That's a fact. Sorry, you had another one, yeah?
Yeah, it's a similar question to the chat before. Someone like me who's quite still early days in trading, there's always going to be that worry about what the sort of future of exchange betting is. A lot of people in Britain are quite pessimistic about pretty much every walk of life. So you hear a lot of doom and gloom in regards to, you know, certain things that could happen, whether it be political or what have you, that could affect exchange trading, which would completely scupper everything for us. Is there any worries from you guys who obviously already benefit from this? Do you have any worries about any political moves that might happen? Because we've seen quite a few shake-ups these past few years. Is there anything significant that could happen that would make you worry about your future as traders?
From a UK political perspective, I don't see a great deal changing, primarily because, for example, presumably you're talking about the ultimate doom and gloom scenario would be like exchanges are banned by the government or something like that, yeah. I don't see that happening because the government have done kind of so much to try and like deregulate gambling. It would be like a real complete U-turn, and they derive so much tax income from gambling that I don't see that as being a major objective from their perspective. I mean, so you look at the things that people would say are quite negative to a human being's health, for example, alcohol, smoking, etc. Everyone accepts that that's the case, but they're still allowed because they generate the tax revenue. And I don't really see, obviously gambling doesn't have to be negative towards someone's health, but by the same token, they're still getting a lot of tax revenue from that. And it'd be interesting to see how the FOBT price point gets picked out in the next few months. I mean, limit of between £2 and £50 maximum stake is like how long's a piece of string. So it's difficult to say really, but I think that might give some form of guidance as to their determination in that field.
I mean, it's also, you know, how you define gambling. You know, that's a sort of an open question. I'm sure, you know, a lot of your own view of yourself is you're not a gambler, and a lot of professional gamblers would say, you know, it's investing. I'm more related. You know, I've been in the financial markets. There is. We were talking earlier about, you know, it's more a question of are exchanges going to have, you know, more of an impact? Are they going to take on more things that we don't consider gambling rather than be pigeonholed as gambling?
Sorry. When I looked at exchanges, when I first arrived, I didn't actually look at them as gambling markets per se. So I went to a First Tuesday meeting where they were pitching ideas. So the First Tuesday meeting was basically a version of Dragon's Den, before Dragon's Den was invented. And you used to turn up there and there'd be entrepreneurs, investors, and techies all trying to get funding or achieve something. But they were pitching all of the stuff then in the early days of the internet as disintermediation, basically cutting out the middleman. So when I looked at the sports markets and somebody pitched that idea, I was thinking, well, what you're looking at really is an insurance market for sports almost. So having spoken to football clubs, they hedge a lot of positions now in terms of we're going to try and reach Europe. We've got to spend £30 million. What's the risk that we won't do that? Let's bring in Mr. Analytics. There's a cost involved with that. Maybe we can hedge that. So I've always felt that the sports markets on exchanges act more like an insurance market or a derivative of some sort. But of course, whenever somebody says to you, what do you do for a living? You have to make up some other excuse. Because if you sort of say, oh yeah, I bet on horses all day long and have done for 17 years, they just think, oh, okay, you know. Well, so sometimes you have a backup.
There's one of two ways.
Yeah. So, a friend of mine invited me to party, and just to wind me up, he said to me, he said to everybody coming to the party, oh, you must speak to Peter and ask him what he does for a living. So at the end of the party, he came back and said, what did you say to them? He goes, because everybody's been commenting that they didn't think that you would do that job. And I said, Matt, I said I was a porn star. And that seemed more acceptable somehow.
Yeah, usually when people ask me about jobs, I just like try and bore them as quickly as possible so they move on to another subject. It seems to work quite well.
You've had that problem.
Yeah,
as well,
it's just it's best avoided. I've learned over time. I think it's just an endless conversation.
I make videos on the internet.
Yeah.
Yeah.
If you guys are consistently winning, you must have trouble finding people to take your bets, unless you're paying up in the high fee range on Betfair. What do you do about this issue?
That was similar to the first question, wasn't it?
Yeah, I mean, you know, are you guys also in the position where you try and get on regular bookmakers and have trouble getting?
Typically, that lasts a day or two. Yeah. Pretty
So
much. in a nutshell.
I originally started arbing years ago when I first joined Betfair. That was the very first thing that I did, was I figured out that I could get 16, 20 to 1 on a golf player in the US, and then stick it on an exchange at a much lower price. And so I was typically arbing in the very early days. But that all vanished fairly quickly because nobody wanted to take my position. So I sort of gave up using bookmakers a long time ago.
And you know, arbing is one thing, and really match betting is quite big as well as far as ways into trading. Would you say that like that is a great route to sort of get into trading, to understand
That's
it?
definitely a calm
You
question.
start out, yeah, or I mean, what are the routes in?
Yeah,
right?
sure, there's a lot more people coming in via that route, I think.
Yeah.
It's more common knowledge, and that probably links in well with the question about accounts being closed, because I think that more and more people that are very, how do I word it, ordinary, that, you know, they're not doing this full time, and you know, and into the numbers as such are getting closed out very quick.
Anyone with the audacity to use a price comparison site a lot of the time, yeah.
Basically. So that's definitely a route in, yeah.
I think the problem when you get people that migrate from matched betting to trading is it's a very different world. So if you're doing matched betting, you're sort of saying I'm putting £5 here, £10 there, and I'm getting £5 back. Whereas with trading, you're saying I'm putting £5 here, and I may get £6 back, perhaps, or I could actually get £4 back. But over the next 100 races, I'll probably get back a bit more than I put in. So it's a different construct to match betting. So I think it's a harder journey. But that said, probably traditional gamblers that try and trade sometimes have difficulty overcoming their analysis.
It's funny. I mean, you know, if you try match betting, I would say you could say everybody that tries match betting and takes it seriously is successful. You know, you could take sports betting in general and say, you know, 5% or even 1% of people are successful. What about trading and taking, you know, how easy is it and how high is the failure rate?
I guess part of that depends upon what you're trying to do. So I consider myself to be an outlier in terms of what I've achieved. So if I would never sell it on the basis of somebody replicating what I've achieved. But if you want to do better than you have done with a gambling strategy, you'll almost certainly do better. But in terms of the rate at which people do or don't make money, it's going to vary dramatically depending upon what exactly they're attempting to do. And I must admit, I do not know what that rate is.
And their own personality is such a massive driver to that as well.
Yeah, it's a very broad question.
Yeah, massively. So, for example, like we spoke about earlier about playing poker and stuff. So, generally accepted is that a poker player playing a cash game might need 40 or 50 buy-ins to play that given maximum 100 big blind buy-in for that table. And it's a similar concept can be applied to trading, and it definitely had good application on that basis for me personally. But how many people really do that? It's so personality driven. It's so difficult to put a figure on it. I mean, even like guys who are like really gifted could have really bad money management skills, or
can't win for that
reason.
reason.
Or disorganisation, etc., till gamble when they're under the influence of alcohol, etc. And I mean, poker players regularly, we speak about that quite a lot. Gamble tilt their whole bankroll on like when they're drunk.
I think the phrase I've always come up to figure out whether you've got an edge or not is just look at social media, and then you'll realise that you probably have got an edge.
Doesn't everyone win on Twitter?
We're only going to be able to take a couple more questions, so yeah. Oh, here we go.
Hi there. Question really about money management. So often when you enter the market, you're entering the market because it's a value, you think the price is too high. But then the price trades down, and to preserve your bankroll, do you trade out, or do you, even if the price is still too high?
If you look at, I think there are two general approaches to that process. The most important thing, if you're talking about stopping out a bad position, is that all too often people use an arbitrary mathematical measure, like a stop of 5 ticks, 7 ticks, or whatever, when in fact I almost never do that. So I'm going into a trade on the basis of having 5 or 10 things in my head that I think will make this trade develop to a profit over the next few minutes. And if that deteriorates, then I'll close my position. And that could be for a loss or a profit. But if a position starts to go against me and all of those things are intact, then I'll still hold my position. But typically, most of the trades that I do, I'm going in on the basis of trying to take the lowest risk possible with some upside. So part of the trick of getting a situation that isn't going to deteriorate is to have a decent entry in the first place.
Do you have any stories about getting in too deep? I mean, or do we?
Yeah, I remember the worst trade that I ever did was at, it's now called Chelmsford City. It was Great Lees back then, and I got on the wrong horse at the wrong time. The price went the wrong way, and I still thought it was fine. And then I realized that my PVR, I'd actually rewound it. And so actually the race was about 20 seconds in front of where I was, and then suddenly it went in play. And the whole thing just disintegrated. And I've never had one as bad as that ever since. That was quite a few years ago. But yeah, sometimes the worst possible losses are the ones that you don't even think about.
Yeah, I think just to add to that, there's sort of two elements to that question. The first one is obviously just constantly reassessing the situation, because only when the situation, it depends how dramatic it is. When it turns, that's when you want to look at sort of scaling out or closing out the position. And the second one, particularly more for people that are newer to trading, I think, is knowing your own personality, because if you can't cope with the tick increments of profit, the amount it's moving, then you're probably better off taking a small amount out straight away. That's more sort of the
but
beginning.
But also stake sizes as well. If you're panicking because the positions have gone against you, your stake is probably too big.
Yeah, if you know that's evoking that emotion and fear in you, then you're better off downsizing it anyway, so you've got sort of clarity for the decision.
The thing that I would add to that would be, if you're entering for a reason, right? And instead of having like an arbitrary tick loss that you are prepared to tolerate, I would maybe encourage you to think, does the condition that I entered the market with still exist? And if it does, then maybe you might want to hold it for a longer period of time, if that makes sense.
I think we're out of time, unfortunately. So we're going to take a coffee break, but hopefully you guys are going to stick around. And if anyone has any more questions, so we're going to take, I think, is it 15 minutes for coffee or 10 minutes? And then be back with our next session. But thanks very much, guys.